Hey, what's going on guys? In this video I will help you understand what the Japanese candlesticks are. I'll show you what their structure looks like and what they represent. If you're a beginner trader, you've probably seen a particular type of chart that many traders and investors commonly use in their technical analysis. It's called the candlestick charts. These charts consist of individual candlesticks that show a trading activity that happened during a particular session chosen by a trader. For example, day traders can use 1-minute chart where each minute is represented by a single candlestick. Investors, on the other hand, would be more inclined to use weekly charts where each and every candlestick displays a week's worth of trading data. So let's closely examine the structure of a candlestick. It consists of two parts, first the body and the second wicks. The main body of a single candlestick consists of a rectangle. It's usually colored differently depending on if the closing price is higher or below the opening one. If the closing price is higher, then usually the candlestick's rectangular shaped body is colored green. If below, then it's colored red. This means that the body of the candlestick visually conveys information about what happened to a security's price during a particular trading session. The closing color accurately describes the final sentiment of the trading day. If it was a good day filled with upbeat economic data and exciting earnings reports, then it's highly likely that we would have a candlestick with the green colored body. This means that the bullish sentiment prevailed and the buyers were in charge. If on the other hand, traders were overall pessimistic about the future economic outlook and mostly sold throughout the trading session, then the body of the candlestick would look red. What this means is that the bulls did not have enough incentive to keep buying, and as a consequence the price closed lower. When the overall sentiment is negative, traders can observe multiple red candles in a row because selling is usually more intense compared to buying. In addition to the candlestick's core structure or the body, there are also other elements called wicks or shadows. These are vertical lines that represent the trading range. The range is customizable and can include different periods of trading data. This depends on what timeframe candlesticks are being used in an analysis. For example, if someone is using a weekly chart, then the range will include information about the last 5 daily trading sessions. Some securities such as cryptocurrencies will obviously have more data because they trade 24/7. For scalpers who prefer intraday data, 5-minute candlesticks can be very important. In this case, the range will include all the trading activity that was recorded during this 5-minute period. Both upper and lower wicks show how high or low the price fluctuated throughout the chosen trading timeframe. Together with the main body, these shadows or wicks provide a complete picture of what exactly happened to the price. In other words, an analyst can precisely figure out at which price point the security opened and at which closed, as well as how high and low price moved throughout the session. As you can see, candlesticks provide very detailed information on price behavior. Because of this, a combination of them also creates different formations and unique patterns that greatly help traders to better understand the market and do the best when it comes to reading charts. If you'd like to learn more about candlesticks and different patterns that they can create, make sure to watch my current and the upcoming videos in this series to learn more about the topic. Guys, thank you for watching and I will see you in the next one.